policy in the past. We encourage no clapping tonight, but we would like an engaged crowd, so we encourage snapping or stopping. Thank you for the example. Or if you really don't like what someone said, you can hiss. Thank you from the experienced folk over here. They've been here before. A few notes about the format. We're going to start with 6-minute opening speeches by each presenter, followed by a question. And then we're going to move into an open floor period where anyone in the crowd can stand, raise their hand, and be recognized by the chair and give a 5-minute speech, which will be followed by a question. After that, one presenter from each side will give a 3-minute comment. We will then move into the lightning round, which is 2-minute speeches, again, from anyone in the crowd, no questions. After that, a presenter from each side will give a 3-minute closing speech, and this will be followed by a vote. I'd like to encourage all of you, especially if you've never been before, to really think about this topic and think about if you have something to say. We do have a lot of experience and experts in the room today, especially our presenters and others joining us tonight. But even if you really don't know that much about this topic, if you just have a question, I encourage you to speak, give your thoughts on the topic. The motion tonight: this House believes that Catholics should not invest in the stock market. Affirming the motion, we first have a fellow at New Polity, Mr. William Bednars. And with him, a graduate student in theology, Mr. Alice Denley. Opposing the motion tonight, we have Professor of Economics and Director of Catholic Business Management and Entrepreneurship, Dr. Michael Walker. And with him, a junior computer science major, Mr. Curtis Drunke. And our chair for tonight, please welcome Mr. Chesko Hinkley.
Let us rise and begin in prayer. In the name of the Father, and of the Son, and of the Holy Spirit.
Amen.
Our Father,
who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done, on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive those who trespass against us. And lead us not into temptation, but deliver us from evil.
St. Thomas Aquinas.
Pray for us.
In the name of the Father, and of the Son, and of the Holy Spirit. All right, we will start with the opening speech from the Affirmative side.
Here. Hello everyone, thanks for having me. I'm going to begin with a bit of background on myself as it pertains to the issue at hand. I grew up in a very financially motivated and savvy family. My father was a stockbroker. Most of my relatives worked on Wall Street. And I was essentially molded to pursue a career in the financial services industry. While studying at Dartmouth, I spent most of my summers interning for investment banks and investment funds. And all of last year, I worked at an investment bank in New York City. This also coincided with my conversion to Christ and my reception into the Catholic faith. In that, I became acquainted with the Catholic notion of righteous investing. St. John Paul II said that all investments must be oriented towards building up the good, the beautiful, and the truth, and communal growth. We ought to orient our investing towards dignifying the labor of our neighbor, and ultimately towards building up the kingdom of God. And this is an exact opposition to the type of investments that I became acquainted with, perpetuated by money lenders in New York City on Wall Street. So I quit my job and moved here. So to start with a bit of an example to illuminate what's going on in our current system, Apple, the largest corporation in the world, has failed to increase profitability in the past 6 years. However, its stock has increased 4 times. It's quadrupled based off of absolutely nothing. So how is this possible? $337 billion worth of share buybacks. And for those of you who may not know what a share buyback is, it's when a corporation purchases its own shares on the open market in order to increase demand and artificially inflate its share price. This improves nothing about the intrinsic nature of the business. This is not a unique practice to Apple, but pervades throughout our modern economic scheme. According to the National Bureau of Economics Research, from 1989 to 2017, of all the equity created in the stock market, 44% of it was attributable to share buybacks in a contracting economy, while only 25% of the increase in capital was related to intrinsic economic growth. So how did we get to this point in which the stock market and market valuations have no relation to reality, have no relation to economic productivity? I hope to explain. I think it comes down to the abstract accounting methodologies implemented by corporations today. A net book value, which is the intrinsic valuation of a company, pertains to the value of a company on its balance sheet. If a company were to liquidate today, it would be sold for this net book value. But this is far different from market value, which is essentially the share price. Share price is a speculation on future valuation of the corporation. When someone purchases a share, it is an estimation of what the share price will be in the future. But at that point in the future, that market valuation is based on a further estimation of what it will be in the future. So it's essentially an infinite regress, an infinite departure from reality. This is extremely problematic, and this is how you end up with corporations like Tesla, whose market valuation is 40 times larger than its actual value. It's essentially problematic when you have corporations directed by the board of directors. No longer are corporations directed by the managerial class who solely cares about the profitability of the organization. No, the ones who make the decisions are the board of directors, the largest shareholders. And their only stick in the game is share ownership. So they're not going to be oriented towards increasing profitability because there's no intrinsic relationship between profitability and share price. All they are going to be motivated to is inflating their share value. And that's why there's been a movement towards share buybacks, divestitures, and other financial engineering schemes. Now, the individual's participation in this system when they purchase a share mirrors this impelling departure from reality. When one purchases a share, they may think that they partake in real ownership, but they simply do not. One does not garner any care for the stock, any sense of responsibility, nor do they reap any intrinsic reward. They have no share in the profits, proportional to their ownership. All they have is a potent ability to sell it to someone who they think is dumber than they are. And this pits us against our neighbor. It breeds avarice. It breeds greed. We ought to orient ourselves towards righteous investing. And I want to make clear, I am in favor of righteous investing, the type that St. John Paul II encouraged, in which we build up the kingdom of God. We dignify the labor of our neighbors. But this is not occurring in the current stock market. I believe that we are in a time in which the sin of avarice pervades throughout the church militant. Many Catholics today are simply economically illiterate.
30 seconds.
We need to orient ourselves back towards real ownership in our real communities, and to orient our money towards building up our families and friends. I do believe that the opposition cares for your wealth, and if you listen to them, you will probably increase your savings account and improve it. But I do not care about your savings account. I solely care about you building up your communities, your families, your friendships, and ultimately, the salvation of your soul.
Hear, hear.
Thank you very much. Do we have a question for Mr. Bernard? Up there in the gallery.
In what way is different the share buybacks to a partnership in which one of the partners departs with some cash from the partnership, and the other partner continues to stay in the business and wants to stay? To what extent share buybacks can also happen in settings that are not related to the stock market? Análogos, I mean.
I'm not very familiar with the idea of a new partnership motivating share buybacks. Typically, when we think of share buybacks, it is with the sole purpose of inflating share price and benefiting the board of directors and the shareholders. As the CEO is always beholden to the board of directors and their inclinations. So I'm not going to try to pontificate about some sort of partnership or M&A transaction which share buybacks are incorporated into that transaction.
Thank you very much. Now we have someone from the opposing side speak.
Doesn't? Okay. I don't care about your wealth. I care about your faith in your works to the degree that money can help you in those, all the better. I heard a lot of complaints about individual markets, about individual market practices, and about individual companies. That's not what we're talking about here today. We're talking about the concept of investment. We don't have a particular stock market on that board. We don't have a particular company. I would encourage everyone to stand up and bring your complaints with particular market practices, particular companies, particular stocks. All the better. It encourages us in our Catholic virtue as we invest in the stock market if we fully understand what we're doing and we fully understand the world around us. That being said, the burden of the affirmative in today's debate is not to have particular complaints. We have a fallen world, and the reality is that even the best of systems can be corrupted. The responsibility of the affirmative is to prove that there is something intrinsically wrong with the concept of investing. Something intrinsically wrong in all markets, for all companies. If they fail to do so, then you have to vote for the negative. Or you can invest in the same company, apparently. So it's really simple. I'm not, a doctorate level economics professor. I'm not going to talk to you about the intricacies of the market. I don't think that's really relevant to any of us because I don't think any of us are going to ever become that. But what I will say is that insofar as you can invest in companies that, I believe as the quote went, beautify the world, build us in virtue, then you almost have a responsibility to do so. You have a responsibility to aid those businesses, to build them up, to build your own businesses like that. We do not exist in an atomized world. You can't simply build a multi-billion dollar corporation by yourself, absent any outside aid. Nor would we want to. Oftentimes virtue is a group effort. That's kind of the extent of what I have to say. I don't want us to make perfect the enemy of the good. And to the degree that you can invest and you can act virtuously in the world, do so. Don't permit some flawed company existing in the stock market to stop you from investing in the good companies, and those companies that actually do good works.
Thank you very much, Mr. Strunke. Do we have any questions?
Yeah.
Okay. So could it be argued that the motion, rather than being interpreted as establishing an absolute norm, is intended to argue as a general rule of thumb, like say many of the proverbs, and so your primary objection is, while relevant, not a complete. It doesn't completely demolish the act.
So insofar as there may be a general rule, I think that we live in a very flawed society, and sure, most companies you probably should not be investing in, right? Any company that uses its money to donate to Planned Parenthood, that uses its money to support candidates, in the vein of the abortion vein, to support candidates looking for taxpayer-funded abortion, obviously that's problematic, right? But the existence of those companies in the stock market, like I said, should not prevent you from supporting those companies that do virtuous works.
Thank you very much. Now we will hear another speech from the affirmative side.
Hello. Hello. So, my background's theology, so I might pull from the gospel for this. Might be helpful for Catholics in investing. Where your treasure is, there your heart is also. You cannot serve both God and man. I'm going to start with the Augustinian point. The externals of a society are not different than the loves which they pursue. So, would a society in which Catholics are trying to put their treasure in the kingdom of heaven, would they create what we've created today in modern American society of a public stock market? As my colleague has demonstrated, he was in that world, and his conversion led him out of that world. Now, why is that? Why would that lead him out of that world? So, he pointed to ownership, right? Now let's qualify. What is ownership in a company? Okay, let's say before this debate I purchased, on Friday, I purchased 10 shares of Apple. Yes, okay. Now what is that ownership that I actually possess in Apple? Do I get to walk into, an Apple store and say, I didn't like this generation of iPhones. I gotta say, I think we should make some major changes. I have 10 shares. Do I have any managerial control, ownership? No. Do I have any actual ownership of making any changes? No, I don't. And in fact, if Apple somehow went bankrupt, I would actually have no ability to claim any of their assets. So I have zero ownership. What is my ownership in an Apple share? Well, what it is the ability to sell that share at a later date for a different price. When I buy a share from my brother, Mr. Dinley the Lesser, of Apple, then what I'm hoping is that eventually I can sell that share for a better price at a later date. So each transaction is always a win-lose scenario. You want your neighbor to lose in the stock market because you're buying his share to sell that right at a later date. Okay, so that's the ownership that we're supposed to be really excited about as Catholics, that we're all participating in the market, in these companies, right? We could go, you could spend 2 hours talking about Foxconn and Apple and China. We all know this stuff. These companies are doing really bad practices, but I don't even need to go there. 2 principles. Catholics investing, real investment. Subsidiarity and creativity. What's the principle of subsidiarity? In a very small form, it's love where you live and love the people you live with. That's what Catholic investing should be. Love where you live, love the people you live with. Where your treasure is, there your heart is also. If your heart is in superior returns, go ahead, S&P 500. Warren Buffett says that's the best place you can put your money. S&P 500. Passive investing. Why not rather look to subsidiarity? Love where you live, love the people you live with. Buy a house, live in Steubenville, go to Leo's. Great example of subsidiarity. And then it calls us to creativity. Subsidiarity does, because you live in a particular place, in a particular circumstance with particular people. They need your treasure, your talent, your time in order to really flourish. When you buy shares, you are jettisoning that responsibility you have to actually bring the good, bring the kingdom of heaven where you are. What you're doing is saying, I care about future profits more than I do caring about the people who are around me. Ownership requires a responsibility, real ownership, not this fake ownership, right? Stock market is a manipulable fiction. Facebook stock just went down $200 billion in the last week. 200 billion. Any 200 billionaires in here? No. Well, did it actually? Did Facebook itself? No. The investor said this notional value of whatever market cap it was, $200 billion just evaporated out of thin air because people sold it. It's this big fiction. if people don't desire the share that you bought, then the whole thing fails. If people don't desire to be greedy, the whole stock market will collapse tomorrow. Everything will just evaporate. It'll eviscerate. If no one thinks Apple's worth anything, it won't be worth anything. Because you need someone to buy that share from you at a later date. Why are we as Catholics thinking that is Catholic ownership? That is building up the kingdom of heaven? I'm not saying it's morally reprehensible. I'm saying it's utterly morally irresponsible. It is looking at an investing and saying, I really don't care if it's Catholic or not. I just care, is my money going to make more money? Is my money going to do better for me? So why don't we look to real Catholic investing? Look to subsidiarity. Look to the people around you to put your time, put your treasure, put your talent. Look to creativity. Take on, the responsibilities of capital. What capital really means. If that money's in your pocket, it may, if you have two cloaks, one belongs to you, one belongs to the poor. So, the parable of the man who gets this rich harvest, and he says, you know what I'm going to do? Build bigger barns. That's the stock market. Always building bigger barns. But his soul is demanded him that night. Because those crops were not meant for just his consumption, but for the kingdom of heaven and spreading that, distributing it justly. So don't build the bigger barns of the stock market. Look to creativity and subsidiarity for real Catholic investing. Thank you.
Thank you, Mr. Bender. Do we have any questions? If you do have a question, please stand and raise your hand. Up in the gallery.
So one of the things that really struck me about your speech was you pointed out that in order to be successful in the marketplace with the exchange of stocks, you have to root for your fellow man to fail in order for you to profit. That made a lot of sense. Are you against competition in the market?
That is a complicated question. In the stock market, competition is taken to the heightened degree. For the Austrian economist, every action is a transaction. So whenever, even me being at this debate, somehow I'm winning and losing in an economic sense. That, I think, is the antithesis of a Catholic view of society, where we're willing the good of the other and trying to lead them deeper into the good, into the virtue. That's not competitive, that's cooperative. And so if you reduce everything economically, I think everything is pure competition. It's pure, I want you to lose. And I think the stock market is the most institutionalized version of that.
Now we have our final opening speech from the opposing side.
Hey, before you click that timer, two things. I agree with a lot of the stuff there, so we'll see how things go. I'm not a Vatican Bank representative. So I love the debate stuff and all this, but keep in mind, right? I write my homilies, I write my lectures, so I have a piece of paper to keep me ordered and thoughtful. And we'll see how things go.
Point of order? Point of order?
Yes, you have a point of order?
No props?
No.
Never informed.
Yeah. Allow. Yeah, we're good. We're good.
So I have a few thoughts right off the bat. Let's talk about markets generally. Where does competition take place in markets? Okay, it is not between buyers and sellers. Buyers and sellers engage in cooperative behavior with each other, right? So they are both volunteering to engage in a transaction. They're walking away from a transaction should they have struck a deal. Both of them believe that they're better off as a result of this transaction. Where the competition actually takes place is usually between sellers and other sellers. If somebody has excess inventory of, say, stock certificates and the price they're asking for is too high, then they have a legitimate incentive to try to cut their prices and hopefully sell whatever it is, excess inventory of Apple stock or something like that. So that's just a comment on competition, shall we say. So, when I first thought of this question, I went to the issue of investing. There's no negative precept, I think, about investing in the stock market. So we, I think, have to find an appeal somewhere, perhaps in moral theology, I thought, okay, lots of popes have talked about investing, and recently Pope Francis has actually offered a lot of advice about investing, including investing in the stock market. We also have advice from past popes in terms of like how to have a right order of your investments. Okay, so what would be an example of what we could claim to be an illicit investment? It's very obvious, like investing in a company that supports Planned Parenthood, let's say, or investing in a company that does some other kind of evil act, right? And you're aware of it, right? So you, as a Catholic, you would say, no, that's illicit, that's not valid, or morally lawful to do. And of course, the obvious case is if somebody, let's say, engages in a formal cooperation with an evil act, meaning you're cooperating with somebody else who engages in an evil act and you're supporting it, you share their goal, right? That is unlawful. Well, there's also material cooperation that you have to watch out for. And I think that was a kind of a subject of the first affirmative speech. So I just want to mention, right, how can we untangle this world, okay? So if you and I were to go over to Kroger and buy some food, I think you should realize quickly that there is a potential for you to be engaged in a kind of material cooperation. Not formal. You're not sharing, let's say, the cashier is going to use some money, right? They got wages and you're helping to support their job. Maybe they're going to use some of their money to buy pornography. Maybe they're going to use some of their money to buy contraception, right? But you don't share that goal. It could be the butcher or the baker or the candlestick maker, right? Somebody who's getting money from you in a market. And right, without doubt, you are in a way, no matter what, somehow materially engaged in some kind of cooperation. The church teaches that, right, formal cooperation with evil is wrong, right? You can't do it. But material cooperation, not wrong, okay? You have a duty to attempt to discover, if possible, right, what is a company doing? Okay, what kind of activities are they engaged in? So, as human beings, we could, take that a little bit too far and waste a lot of time investigating every possible investment. So, I think the Lord and the church teaches that you should engage in this in a reasonable fashion, right? Use your time, and should something come to light, right? And you realize, oh, this is an awful investment kind of situation I've gotten myself into. Well, pull out of that, right? Make sure that you act in a manner in accordance with your conscience. So have a well-formed conscience. We're all called to trust in God, right? So some people kind of think of investing as gambling or exploitation or some kind of illicit, right, reliance on passive income, which is sort of a denial of faith, an offense of our faith in the Lord. And that's probably not quite true. Okay, I think rather I saw in my mind scriptures leap into my mind when the gospel came to the fore on the floor, and I thought, great, I love that. Don't worship God and mammon. The church would teach, for instance, if you need to place food on your family's table, do not use money that would be used to purchase food to buy stock in some corporation. Right? That'd be wrong. So you have to have a right order. Okay? Pay your mortgage, right? In a way, savings is like a residual. And this is part of papal teachings, right? You use your wages properly and in accord with the needs of your family. Let's say you do have superfluous income. Okay, now you engage in saving in some way. I do agree that sometimes you want to support somebody locally. That's fantastic. But I was thinking about, well, Joseph of the Old Testament. One of the earliest records we have of somebody involved in crop futures, right? He's investing in grains. He's taking all of this gold from Pharaoh and he's buying up all the grain. Because there's going to be a moment in the future that he has learned from a dream that there will be drought and famine and so on, so he's going to safeguard his kingdom, shall we say. Very good idea to do that. In our own lives, investing, I think of it as
30
good
seconds.
Because in the long run, right, we have to realize perhaps times will not be so fat always. I go into retirement, I'm going to need to, basically save some money so that I can live in retirement, support my grandkids with great toys and travel to them and so on, right? I have 7 grandkids, right? So it's awesome to think of, I planned ahead, right? And I don't want to work till I drop, right? So, wow, that 6 minutes went really fast. I'll have to think about the last thing I want to mention, and that is St. Augustine, who said, be rid of pride, wealth will do no harm.
you very much, Dr. Walker. Do we have any questions?
Come on, I'm used to it.
Do you think most people investing in the stock market are doing proper research on the companies that they're investing in?
You said people, do you mean Catholics?
Yeah.
Well,
Or is it mostly just picking the big?
let's say this. Our job of evangelizing is definitely to Catholics, as well as just everyone in the world, right? 80% of Catholic married couples engage in contraception, right? So I doubt that they're all relying on, the very, let's say, righteous investing, vehicles and those, Ave Maria Fund kind of, screening devices. So I think we should work hard to encourage them to discover the nature of their possible formal cooperation and issue of, like, if they discover, hey, that you have a materially cooperative, support of an evil thing, you could, call them to get a better formed conscience and act on that.
That concludes our opening speeches. Next up is open floor, and just as a reminder, each person who chooses to speak will only speak for 5 minutes and must accept one question. Do we have anyone who would like to speak? Please stand and raise your hand if you'd like to do so. Anyone in the house?
The other economist is coming.
Okay, perfect.
You're here.
So is this in any order? Speak in favor or against the house, or how does it work?
Any order you would like, sir.
Okay. So I have several comments. I prepared my notes, but I cannot use them. But it's fair that I don't use them. So for one part, I think the share buyback abuses are real. They are dangerous, and they bring a problem, and they show something that is wrong. But they have a self-correcting mechanism, because the share buyback concentrates the ownership on fewer and fewer shareholders. And it's taking cash from the company to buy those shares, and those that remain shareholders know that there is less cash, and they are holding more risk. So the value may be going up, but it will eventually correct itself, as the shareholders are very few. They begin to say, okay, what are we going to do with this management? So it's something that you can see abuses, but usually there's a correction mechanism. Also, it can happen in a partnership. You have 3 partners, one leads, the other 2 give the partner that leads the cash, and the 2 remain there in the partnership. The partnership didn't change. It has less partners and less cash. Then the problem of ownership. You, as a stock owner, are an owner, as if you were the owner of a sole proprietorship. They pay you dividends. That doesn't depend on somebody buying your stock. Every year they can pay you dividends. Dividends is revenue minus cost, is the profits. The value of the stock comes from the sales of the company, from the products that the customers buy, not from the next buyer. If you don't wait until they pay you dividend, you can sell your stock to somebody that will wait. And if they choose not to pay dividend, the stock will go up in price because now there is more cash. They didn't pay dividend. So in the end, if they choose to buy the shares back with the cash, it's kind of paying you the dividend to those that want to sell. So the mechanism has a self-correction process there. Ownership is good. It's good for a sole proprietorship, it's good for the corporation, for any corporation. But you cannot own big things alone if you are small. You need to engage in cooperation to own the big thing. If you want to own Apple, or if you want to own a power plant, you have to get together with a lot of people. And this is what you do in the stock market. You are getting together. Instead of getting together in a co-op, you get together in a sense that is everybody putting money for that. Of course, they will be big and small, but your share is real. It's good in itself. It provides capital to the managers to organize the firm. He provides capital to the workers are happy, they have those machines to work, they have a manager that hires them, the manager is happy, has somebody financing the operation. Once a year you can get to assembly and say, oh, I don't like this management or whatever. So all these things are real ownership. The fruit of the work and of the savings. You work, you have your money, or whatever means, and you save a part. And you can buy a corporation down the road, a small shop in your town, which is beautiful and it's nice. You can buy Leonardo, or you can buy a lot and put the competitor to Leonardo across the street, or you can buy a share in, I don't know, in Dunkin' Donuts. Who knows? You can do it in many different ways. It's good to invest. It's good to own business. And one way is in stock markets. The ownership is real. The stock markets provide benefit. They allow you to buy bigger things. They allow you to have reports that are clear. They allow you to sell before the thing, if you cannot wait. You can go, you have liquidity, you can go and sell your share if you need it, say, to pay for health expenditures. If you buy a Leonardo, you cannot sell it in 1 month. If you have a problem and you need the money, what do? If you buy a stock, you can sell it. So it has some benefits. It has reporting, an organized market. And then you will say, oh, but I see so many bad things. Okay, but you see some bad things anywhere. I mean, you see it in the stock market, you see it in co-ops, you see it in partnerships, you see it in limited liability companies. Because people don't behave. These problems will come from honest mistakes. They may come from dishonest dealings. Okay? You have to behave responsibly. Buying stock in the stock market is good to the extent that people are behaving well. And that's the key. It's human nature, and we see so many wrong things because we have a fallen nature. Meanwhile, you can, with that, provide for somebody to work. The workers have responsibility. The managers have responsibility. And the investor has responsibility too. If you see the company doing something wrong, you have to disinvest. The bigger the thing they do that is wrong, the more effort you have to make to disinvest. The more certain you are that they are doing something wrong, the more the effort you have to make to disinvest. Meanwhile, you can stay. I mean, you may choose to build beautiful Stubenville and decide, I'm going to invest all my savings in Stubenville related business. Or you have, your family in Argentina and you want to invest in Argentina. Who knows? There are many good things to do with your money, but a lot of the problems of the stocks are basically problems of human nature, and so we need to be tough on the market organizers and on the regulators and on management. As investors, we need to keep track of the regulator and say to the regulator, regulate better. Are you sure they are not doing monkey business with these share buybacks? Or you say to the market organizer, is this market properly working? Is reporting all right? Are there problems with insider trading? And you get tough on the market organizer. Maybe we need to organize a stock market in Stubenville.
Do we have any questions? Dr. Miller.
Yeah, I've got a question. So we know that there's a lot of problems with income distribution. We know that there's more and more billionaires among us, and that there's a distinction between those who are super wealthy and those that are not so wealthy. But my question for you is this: to what extent has the stock market itself led to a thriving economy in general, where we are, all of us, among the wealthiest the world has ever known? So we share in economic blessing. I believe that the stock market has helped bring to us all. The question for you is, to what extent has the stock market brought us to the place where really all of us, relative to those in history, are wealthy?
To paraphrase my friend Will, I don't have an answer for that. I don't know. I think it may be something there. It may be to the taxation of capital, to how much of the stock market is providing to big corporations maybe to hide their profits somewhere? It's a complicated answer, I'm not sure.
Thank you very much. All right, just a couple of reminders before moving on to the next speech. If you're up in the gallery and would like to speak, please come down to the floor before you raise your hand, hence the term open floor. And it's also, if you have a question, please wait for the microphone to come to you before asking. Thank you. All right, now we shall move on. Do we have any other people who would like to speak? Mr. Imam.
Hi, thanks. I just want to make a couple kind of clarifying points on this. The stock market, of course, is a colloquial term that we use commonly for the secondary market. Now, just to make sure that this is really clear how the secondary market works, is that a company, when it's going public, will first sell its shares. This is an IPO. We buy their shares, that money goes directly to the company. But on the secondary market, it works more like when you go to an NFL game and somebody buys some tickets and then they'll go outside and like, hey, I'll sell these to you for $200. Well, he bought them for $100. That's the secondary market. That's how the stock market works. That's a really important point that I just haven't heard addressed so far today, and that changes everything. So you might ask the question then, well then how does my buying of a stock actually support a company? And there's two ways, and these are fair. One is that when you are buying a stock, you are usually giving up claims to profits that are legally yours. This is in the fine print, so you can go look at the contracts, they're there. 50% of companies today will actually give you dividends, but that's not proportional to your ownership. So I'm not making a point either which way on this. These are just kind of a point of information, as you will. There's a second way in which it supports the company, and it was alluded to on both sides, that the board of directors will respond to share price. But because that's their only claim to having an increase in wealth in a public company. Okay, so these are really, really essential. So if I'm going downtown, say I'm Mark Nelson, and I say I'm going to go to downtown Steubenville, I'm going to put money in downtown, I'm going to build a coffee shop for my neighbors. He is directly putting money into a venture. If anybody was there to support him in that venture, they were his partners. But it's not the same way on the secondary market. So that's just kind of a first point of information. Now, how does that actually affect what you claim of ownership? And I have to really respectfully disagree with Juan. Do you have any managerial control? The answer is absolutely not. You don't have any managerial control. The Venerable Fulton Sheen actually brought this up. He said, people who are trying to defend the stock market forget an old claim of ownership that is grounded in the church. That ownership, it does correspond to your work. He makes the case of a farmer. He says, everybody knows that a farmer has the right to ride his horse. And everybody also acknowledges the fact that he actually has to care for his horse. But they forget the same principle of ownership applies to those who own stock in a company. So that's just one point there. Okay, again, Alex brought this up. If you collapse, if the company collapses, the the U.S. Securities and Exchange Commission says that the owner doesn't even need to be informed of the company. All right, so again, your ownership is further removed from reality. What about, if you just try to walk in, you buy some Ford stock, and you say, hey, I just want to see these good old-fashioned assembly lines. What are those like? Are they going to welcome you as the august owner of the company? No, they're going to call security and kick you out. There is no way that you are an owner of the company. So really, what comes down to the question that I really would love to hear addressed on both sides is in what way are our investments really investments when it comes to the secondary market? You're here. How is it that you are actively building up something? See, this is the thing that I'll end on. When Christ came and he brought the new covenant, he did away with the Mosaic law. He fulfilled it in doing away with it. Why? How did he do that? He moved us from having the law written on tablets to having the law written on our hearts. We're no longer looking at, can I do this? Can I do that? No, our eyes are on Christ. We are moving towards Him. Our whole lives have to be moving towards the Holy Trinity. And that's the question that I sometimes have with the secondary market and companies like Ave Maria, Knights of Columbus funds, where they say we don't invest in these. But saying we don't invest in it is actually more in lines of somebody that still has the mindset of the law. Can I do this? Can I not? Where's the line? Have I crossed it? When we need to be moving forward in the direction of building the kingdom of God here on earth, and you can actually build something by investing in real things rather than just ideas of stocks and shares.
Do we have any questions? Dr. Cirillo.
Oh, hi. So my question, my question is just that, did you really mean strictly that Jesus did away with the Mosaic law, like ceremonial, moral, and juridical precepts?
No, I'm saying he's fulfilled it in virtue.
Because what you said was that when Ave funds are saying, like, we don't do this, they're saying in terms of Mosaic law, which is like, do this or don't do that. But the do this and don't do that stuff,
yes.
Jesus didn't do away with it, okay? Or did he? That's my question.
No, thank you for asking that. No, and thank you for letting me clarify that point. So, obviously we have the Code of Canon Law for a reason. The law is a teacher. It is a magistrate. It directs us in a way that we should go. But ultimately, and for that reason, I said that I have hesitations with Ave Maria, with Knights of Columbus, because in some ways they do start to push us in the right direction, okay? Does that make sense? But it is not the fulfillment of the law. And there are better ways that we can save and invest our money. That's my point. Thank you.
Thank you. Do we have another speech? All right, Ms. Lucy Sands.
So when I was a kid, my dad told me that I had a stock in P&G, and I was super excited because I was like, I own part of a company, and it's the company that makes toothpaste. So where they sell toothpaste. I'm like, that's so cool. And then when of course, as Mr. Denley said, when you own stock, you do not actually own part of the company. So that was super disappointing for me to find out. Even more disappointing is that I used that stock to pay for my college education when actually Catholics should not invest in the stock market, and that's what I'll be arguing tonight. So most of the time when you invest in stocks, you're investing in companies like Apple and Google and Microsoft and all those big companies that make lots of money and make the world go round. And these companies, most of the time, the majority of people and the majority of Catholics don't know what these companies do. They don't know how these companies make their money. And these companies make their money a lot of the times through things like child labor, where they don't have to pay kids, 7-year-old kids in South America a lot of money, and that's how they make their money. Or they invest in things like pornography, because it's one of the fastest growing industries right now, and that's how they can make a lot of money. And so this is the kind of things that your money is doing when you invest in the stock market. Your money is going to pay children $1 an hour, or it's going to pay sex workers. And the majority of the time, this is what your money is doing, and most Catholics don't know that, and they should not be blindly investing in the stock market. The second point I want to make is that wealth is not the most important thing in the world, and we should know that as Catholics. And there's something to be said against the idea of just investing in order to make more money. That should not be a goal in life, to make as much money as you can. And there's a difference between going to Starbucks, buying a coffee, and maybe your money is going to Planned Parenthood. But there's a difference between giving the Starbucks employee money and then you get a coffee in return. The Starbucks employee has a job, they buy more coffee beans, whatever, and then you actually giving a company money so that they can use that money in things like child labor and pornography to make you more money. There's something really corrupt about that, and also just unnecessary. And there's also a difference between having to steal to feed your starving family and investing just so you can make more money for some vague future where you want to have more money. No one invests to feed their starving family. It's not like an immediate return. So you're not putting food on the table by investing. You're saying, I kind of want to have more money in the future. But you don't need that money right now, and there's no reason why you should be investing in things that you don't know about and that could very well be incredibly corrupt. And it's so hard to know what your money is doing because it goes so many steps before it makes you money. And of course, there's been a lot of scandals like the Vatican and different Catholic dioceses investing in things that turn out to be, paying for abortions or things like that. And when you can't even trust your Catholic diocese to, give you a 401k that invests in actual virtuous stocks, there's just not a lot you can do from that. So I believe that Catholics should not invest in the stock market, not only because it's incredibly corrupt and you don't know what your money is going to and what your money is paying for, but also because there's just no reason to have your goal in life to be to make as much money as you can by investing in the stock market.
Do we have any questions? Mr. Strumke.
Do you intend to profit off your sin, or will you be divesting your ill-gotten gains and taking on additional student loans? Your ill-gotten gains and taking on additional ill-gotten gains and taking on additional student loans in order to pay for college.
Wait, can you rephrase it? I'm sorry.
Are you intending to profit off of your investment, or are you going to be divesting, getting rid of the money, and taking on additional student loans in order to pay for your university career?
Yes, unfortunately, I've only been recently enlightened to the evil of the stock market, so it's too late for me, so I'm enlightened now. I am graduating and not taking out any more student loans.
Just one question each round.
Hello everyone, my name is Nick. So just a few thoughts on some talks that I've heard tonight. So something that just keeps coming up is the morality of, does somebody really own the company if they have some small share of the company? And it's just driving me nuts. It's like, well, even if you have one share of the company, you still do have proportional ownership of it. You just don't have power proportionate to the other owners. If you, acquire a controlling interest in the company, you will be able to make demands of that company and what it does with its money, how it develops things. You will be able to control it. I mean, Warren Buffett owns 5% of Apple. Certainly not a controlling interest, but he really has the ability to influence the decisions of Apple for the good or the bad. So just to clear the water on that issue. Another issue that keeps coming up is that, people should invest in, I guess, small town things, like small businesses. I love that idea. Go for it. But something called the efficient market hypothesis, well, actually no, not that. Efficient allocation of capital. If an individual has a bunch of money and they don't know what the heck to do with it, well, what are they going to do? They're going to invest in the stock market or in some investment vehicle, small business, even you could open a small business, to try and increase the return, not for the sole purpose of making money, but because, they know at some point in the future they're going to have to do something else. That's kind of, with the virtue of prudence. You're not, burying your treasure and kind of letting it degrade. With inflation, and instead, you're going to invest for the future. You're saving for the future. So that is by investing in stocks, you and millions, across billions of other individuals are going to collectively pool your money together to help form a company that, if this, mechanism and allocation of capital didn't exist, would not exist at all. There are a lot of big companies. They do immoral things, but they just as easily couldn't. they could just avoid doing those immoral things. If those companies did that, it would be really good that they exist. I mean, you could argue that it's still good that they exist, but my point is, large companies that do great things like Home Depot, Lowe's, picking ones that are less sketchy, those companies wouldn't exist without this allocation of capital. So yeah, and something else, they keep saying, okay, yeah, a lot of companies do a lot of immoral things. You really need to be careful about what you invest in. Well, yeah, you should do that. As a Catholic, you need to form your conscience well. You should avoid formal cooperation with evil, certainly. And as far as material cooperation with evil, you should really be aware of where your money is going. Probably don't buy a share of CVS. I mean, just saying. We don't know what they sell. So, just at least don't violate my conscience. But there's a lot of companies that do a lot of good things that it is, I wouldn't say strictly virtuous, but not contrary to the virtues to invest in. Like a Lowe's. I mean, if you can, help them do their mission by, buying a share of Lowe's, at some point in the future, maybe they will buy back shares, maybe they'll engage in a stock split, maybe they'll issue more stock and they'll benefit from that high valuation, they'll get more capital, they'll be able to use that to further, increase sales. They're benefiting their shareholders, they're benefiting their customers. This is just all the way around doing good things for society. Every company has some things about them that you're not going to love. But with those vehicles, it really enables, the market to function more efficiently than it otherwise would. Say with a sole proprietorship or something, or even a partnership, it's really hard to get a lot of capital. The alternative to getting an IPO is to go to a bank and say, hey, give me $1 billion. Good luck with that. That's not going to happen. I mean, but say you're like Steve Jobs in the 80s. You have a better chance of getting a boatload of cash in an IPO, which is going to help you do more with your company than if you had to start from the ground up. That is to say,
30 seconds.
Say sell a few things here and there and slowly accumulate enough money to expand your company. That just wouldn't happen. And the stock market really enables that to happen. And Catholics can, engage in this business with a well-formed conscience, avoiding immoral investments to the best of their ability. Every company is going to have some level of material cooperation with evil, as Dr. Walker pointed out earlier. But in doing so, they're both being prudent. They are having real ownership in the company, not fake ownership. That's not true. And ultimately, by the way, if the company did go bankrupt, this also drives me nuts. After all of their liabilities are paid, if there is anything left over, the shareholders would get something from that. Just more often than not, there's nothing left over. So, yeah.
Do we have any questions? Yep, yes, you. Yep.
Okay, so my question is, I've heard from everybody on the negative tonight that material cooperation is not strictly forbidden, and as well that the investment in the stock market is not inherently evil, but that more subsidiarity minded investments are probably better. As Catholics, why should we not just choose not to do anything which participates materially in evil, and not just choose to do the best thing possible with subsidiarity-minded investments?
Well, there's 2 points there. So the first one you said is, well, why not just avoid everything with material cooperation with evil? I think that's impossible. If you go to Kroger and you buy a bag of chicken, well, Kroger sells contraception. You're increasing, their profit to some degree. You're increasing their revenues. And I mean, to some extent, that's going to enable them to further do another evil.
But you're not buying their stock.
Well, you're not buying their stock, no. But that's different. I would say, yeah, don't buy their stock. But as far as buying their food, that is still material cooperation.
When I buy stock in a company on the market that is doing only good things, am I not supporting the market which does enable better
Point of order,
things?
no follow-up questions. Thank you.
Can you repeat your second point, though, because I did forget that.
Point of order, no follow-up questions. Thank you. All right, yes, next speaker. Mr. Ryder.
Here.
Alrighty. In regards to the motion tonight, I don't know if I'm inclined to believe with the affirmative that you could categorically say investment is wrong, but what I am going to argue is that it tends towards vice. So in the same way that you avoid sin, a near occasion of sin, a near occasion of sin itself may not be sinful, but ultimately if you continue to participate in that method, that environment, whatever the near occasion of sin is, then that it would tend towards vice. So I'm going to argue that as a general principle, we should avoid the stock market. So my reasoning for that is, I think the strongest point made from the affirmative side is about the, when they say not a real means that it's this depersonalization of interaction between human beings. In Revelation it says that we'll behold God face to face. And I think that's an important point to keep in mind. In the Catholic Social Teaching Compendium, paragraph 110, it says that social interaction between persons is so integral to the development of human beings, like that without it, right, that we cannot fulfill God's plan of salvation. We could not fulfill, so to speak, that coming to a fullness of being that we're meant to as children of God, right? And even another paragraph in 133, it says that man should not be manipulated to ends foreign to his nature. And I think there's something to be said about the means of the stock market that necessitates that. So Professor Welker said that there is a voluntary cooperation between individuals, buyers and sellers, like there's agreement. However, I mean, the people involved are reduced to mere artificial representations, right? And so take an example of social media, right? We have this interaction that goes on, real people on the other ends of technology, right? But what's the result? This environment is designed to where we, we're focused on the followers, we're focused on the platform itself is designed to have a consumer mindset that ultimately is not good for our well-being. It does not cultivate good character or a proper perception of our identity or of other people, or even the environment of the city, right? You become an anonymous individual, and there's something about an environment that necessitates, right, that you have to pursue your own self-interest, right, because there's not real knowledge of people as persons, but mere as just, so to speak, units in the machine that is the society, right? So the stock market, getting back to the depersonalization, right? The people, through means of technology, are reduced to these artificial means. The environment necessitates that we're pursuing money as an end because we're not actually able to come to a conception or perceive the other end as people. And I think that is the key fundamental factor where the engagements with each other in environment ought to be social insofar as we can view the person we're cooperating with as people. And the best means to achieve that is through your local environment, your local community, where you know the person as a person in the sense that God knows us as a person. And so I think we should, in anticipation of our union with God, see each other face to face and engage with means where we can see each other as persons, and that as a general principle, we are to avoid this artificial representation of each other through the means of the stock market. Thank you. Ask any questions?
Over there.
So, are people who start businesses, large businesses, because they love airplanes or they love hamburgers and fast food, or are stock traders or people who are good with numbers and financial things, are they people with stories with whom our interactions are real, or are they all Scrooge McDuck riding a wave of coins? Or I might have dated myself with that analogy. So this idea of depersonalization is fascinating because I would say it seems to me like you might be depersonalizing an entire group of people who are doing legitimate and interesting things.
The question.
So the question is, does depersonalization only go one way? Are those people as well? Or do they cease to be people because their interests are different than yours?
Okay, so again, I argue for avoiding stock market as a general principle, insofar as it doesn't tend towards us building virtue. So my response to that would be that ideally, the people do engage in these methods of stock investments where we're building companies where, so to speak, the environment necessitates those means. I would sure hope that those people would be the most virtuous among us. And it seems, unfortunately, due to our human brokenness, that is not the case. Thank you.
Gentleman in scarf.
Here, here.
Thank you, Right Honorable Speaker. So, I was not going to speak tonight, but then Jacob said my MKL trigger word collapsed. I apologize in advance if I commit any philosophical or theological faux pas. Please address any angry comments to davidwillie@student.franciscan.edu. So, collapse. America is in a collapsing system. Anyone who's heard me talk about anything before knows that this is a frequent theme of mine. But as Professor Gaston said, hobby horses are meant to be ridden. So, in regards to the stock market and the economic structure of America currently, we are in what some scholars call the looting phase. That being, the American society has degraded to such a point where people no longer see it as a unified culture, a unified society. They're simply just trying to take their piece of the pie. And again, this is where I may commit one of these ethical faux pas. Unfortunately, we find ourselves boxed into a similar situation because the problem with trying to be ethical in an unethical society is you just make yourself a martyr, and there is a noble thing in that, but it often means just death for you and yours. So, should you invest in the stock market? Yes, in the sense that you should basically steal from Fortune 500 companies. One, because it is effective in perpetuating, continuing accelerating this collapse of the economic structure. And two, because it's cool. And that's really the more important thing. Now, what do I mean by this? So to give a personal anecdote, the most important type of argument, I am currently interviewing 5 some odd companies in various sales positions. Something I would have considered morally reprehensible about 2 years ago, but I'm also looking to get married and buy a house, so necessities occur. However, what do I plan on doing with the money I might earn from these companies? I'm not going to, I go to Pittsburgh, I get my paycheck. I'm not going to go to Chick-fil-A and buy a chicken sandwich. I'm not going to go on Amazon Prime and do whatever. I'm going to renew my new quality subscription. If I buy a house and need some work, I'm going to call the good men at Sullivan Contracting. And if I need some kind of furniture built, I will call up local barrel-chested tradesmen. And the point behind this is, Mr. Riley brought up the point of depersonalization. And yes, they do depersonalize this. These companies, these Fortune 500 companies, see us as economic units, interchangeable cogs that can be plucked out and put in at will, and once you are that cow that has been milked dry, you can just go disappear into the dustbin of history. But here's the thing, we have to do that to them. So, take that money and invest it in your community, and that's a point that's been made. But the crucial thing is, I'll give you a second to everyone knows I'm a bit scatterbrained, but the crucial thing is that you have to understand these people are wicked. These people are evil. Never attribute to ignorance what could be attributed to malice, because oftentimes it should. These people really look at the American working class, the blue-collar working class, and see someone they find just reprehensible, ugly, someone they think would be better if they were addicted to heroin and giving all their money to Amazon. And this is really what they think. And in regards to who to invest in, well, it's tough because if you go on Wikipedia, I'm sure any Fortune 500 company, there's about 2 to 3 degrees of separation between something that's completely morally reprehensible. I don't think that's a point that needs to be belabored. So, should you invest in the stock market? Yes, steal from them. Simple as that. Yeah, that's it. No further.
Do we have any questions? Ms. Cirilla.
It seems like you're emphasizing the importance of small scale investment, but realistically with America the way that it is, in all of it working together, what do you say to that a lot of what you're saying doesn't apply to large scale business? Do you think all transaction and everything should be small scale?
Short answer, yes. Long answer, it's complicated. And a footnotes version of the long answer. Essentially, big business, capital double B, is generally speaking evil and should not be invested in. But yes, we want to eventually try to create larger, big companies. But the whole point of me bringing up collapse is that things are going to economically get worse before they get better. So all those big businesses that currently exist are going to fall away. So investing in them and trying to see any long-term growth of them is a fool's errand, in my opinion. I hope that is a satisfactory answer, it probably is.
Thank you very much. All right, this will be the final open floor speech, and then we'll move into the intermission. All right, the gentleman with the cat sweater.
So obviously we have a problem, right? So there's companies out there that don't support our Catholic values, and we're scared to put our money in that pool because we might accidentally support them too, also through like a 401k or something like that. But does anyone know how to short sell? Does anyone know what that is, what that term applies to? All right, I'll explain it really quickly here. So let's say that Nicholas here has a lot of Skittles, all right? He's a Skittle buyer. So he has 10 bags of Skittles, and they're all $1. I borrow his 10 bags of Skittles, and I go to Dr. Welker, and since he knows nothing about economics, I sell him the bags of Skittles for $1. Now, I knew something Dr. Welker didn't know. I knew the Skittle price was going to drop by 50%. So once Dr. Welker loses half of all of his value in the Skittle bags he bought, I buy them back from him at only 50 cents, then return the Skittles to Nicholas, and then I pocket all the extra change left over throughout the transaction. So that's how you short sell a stock. Now, what happens is when you short sell a stock, you're betting for its value to drop by a lot. So it's the exact opposite to investing. So we all, hate a certain quarterback or team or, company on the Fortune 500. Personally, I hate Amazon, right? And I'm seriously considering short selling their stock. Have you guys heard about the 2022 fantasy politically correct version of Lord of the Rings that's coming out? I guarantee you once that sucker drops, so is Amazon stock. If you really hate a company, right? If you really hate a company, you can short sell it, and you can, through that channel, eliminate an evil in society, which would be the sacrilegious readaptation of Lord of the Rings. So, I can't agree with the house here. The stock market isn't bad. You gotta be smart. Any questions?
Yes.
Don't you think it rather implies that the thing is bad if the only way you can use it for good is screwing people that are evil? Doesn't it rather imply that the thing itself is bad? The only way we can use it for good is by screwing people we think are evil.
Yeah, so... All right.
Thank you very much for that. All right. So next up, before we move to lightning round, we'll have a recap / a restatement or any of the points that the affirming and opposing side has. So we'll have one 3-minute speech from the affirming side, one 3-minute speech from the opposing side.
You're here.
So I just wanted to address the point made by Juan regarding stock repurchases. saying that it is a self-correcting mechanism, which is just nonsense. When one company issues that it's going to repurchase its shares, its stock price immediately skyrockets because of speculation and anticipation that their share price will increase. So you have to understand the incentive system. People are going to follow, put their money where profits can be had. And I just think it's a fallacy to consider this idea that it self-corrects, that the cash will decrease and whatnot, because it artificially just increases capital through speculation, a further departure from reality, like I was saying earlier. And secondly, I think it's important to note the concept of benefiting without work. St. Paul said, if you do not work, you will not eat. And I think this shines a lot of clarity on the issue today, is that you ought not to attain wealth if you really do not work. Because if you don't work and you profit from something, you're benefiting off of someone else's work. Because there had to be some input of value in order for something to improve in tangible quality. And I think this occurs in the stock market quite a bit. For instance, Boeing, I remember in 2018 or 2019, they started to reallocate a lot of their software production to low-income societies within India, and through this cost savings, they generated $20 billion of share buybacks, and the shareholders benefited from that. So in that benefit, a shareholder was reaping the rewards of reallocating wage labor to cheaper production of labor in India. And so they're benefiting off the wage laborers in India, not themselves, because someone has to work in order for some profit to be gained. Lastly, I think it's important to note that there's this conception tonight that we ought to invest, even in the stock market, we ought to invest in companies that are morally illicit, and this should be allowed. But when you invest in the stock market, even if it's an altruistic company, you really don't know where that money is going to. And it's not like a societas in which you are investing in an actual journey of a merchant going out to sea and you're benefiting proportionally in that profit. You're just blindly giving money away to this company, and they could pursue any sort of mechanisms, financial engineering, or investing in some sort of outsourcing scheme to India or to Asia. You have no conception of where this money is going. And I think it's just irresponsible to be investing this way, even if the company is morally altruistic in its business model.
Here. Speech from the opposing side.
I've been hearing a lot of monolithic statements about how stocks work. There is no singular way that a stock works. There is no singular contract between you and a company. If you're going to invest in the stock market, know what you're getting yourself into. All right? I don't see any reason why, if I have a buddy, right, who decides to have a small private market in my town, right? Because we're talking about all stock markets, we're talking about the general stock market. I can't invest in that I can't draw up a specific contract of ownership and work with him. Now, I did hear a generalized concept from the affirmative saying that you need to work, right? That you can't simply profit off of other people's works, and I agree with that. The problem is, I do not agree with this sort of false distinction between capital and labor. My capital is the results of my labor. Companies need liquid cash in order to function. As an investor, I'm providing that liquid cash. Don't let them draw this sort of willy-nilly distinction of because you're operating as someone who has worked previously, has gathered under you enough material security that you can then go aid another business venture, as if you are simply parasitically attaching yourself to the labors of others. It's ridiculous, and I would actually say even a Marxist concept. So that's really the extent of what I have to say. don't conflate all markets together, and don't make investors out to be these sort of parasitic individuals attaching themselves to the labors of others. You need liquid cash in order to build a company, and that's what you're providing. You're providing that real and legitimate benefit so that you can pay your workers rather than have your bank account be empty when payday comes. Thank you.
Now we're moving into lightning round. Just as a reminder, lightning round speeches are 2 minutes long. You will not be able to take any questions, and it's only for a couple brief points you may have. All right. Mr. Willie.
Wow, this has been a thoroughly enjoyable debate. Haven't had this much fun in a long time. I just want to say, anyone walked outside today and thought, "Ooh, it's pretty warm, pretty sunny. Seems like winter is over." You can thank me, I wore my floral tie today. So, anyway, I just wanted to make, I waited until the lightning round because, like there's a lot of very educated people here. I'm one of the not very educated people here. So I don't have a lot of thoughts on this. And it's actually, I've been thinking more recently, I'm kind of interested in investing in the stock market. So this debate has been perfectly timed for me. I suppose I just wanted to make a couple of points clarifying what I think, is kind of, like just the term. So I think it's pretty clear, I do disagree with Mr. Strumke, like the way the phrase the stock market has been used tonight is very clearly referring to what Mr. Imam called the secondary market, right? And it's actually generally almost everyone has, by universal consent, implicit consent, refers to the New York Stock Exchange. I'm not talking about like FTSE 100 or something. Secondly, I think it's pretty clear as well that the question of should not invest is not a moral absolute, but I think what Mr. Denley accurately called moral irresponsibility. It's more of a prudential question. Like, I don't think anyone tonight has made a dramatic claim of it is always and intrinsically immoral. So this is a question of prudence, or how should we think about using our money? And it seems like there isn't a lot of discussion as Catholics about how we should use our money. But the point that I found most significant tonight was the point made by Will, that the idea of abstraction or removal, because I think it seems, again, like the idea of the secondary market means that we're not dealing directly with companies, right? We're dealing with this internal circle of investments. I think when the point was made about do we actually have ownership, please conclude. I mean, it's clear that no one opens up their Robinhood app and chooses a company to invest in because they think I want ownership in that company. It's because you're planning to sell your stock to make profit. And so we need to, I think it's right to say prudentially, we need to bring things back to the real. And that's why I'll be voting with the House tonight. Thank you very much.
Thank you very much. All right, another lightning round. All right, go ahead. Yes, you.
You're here. Let's see how much my addled brain can spit out in 2 minutes. Little drops of water, little grains of sand make the mighty ocean and the pleasant land. You can't have it both ways. You can't say you have no ownership in this company and your money going into this company is funding abortion. Your money, you have a little pittance in a company, you have a little pittance of control and a little pittance of maybe good or bad influence. Who is my neighbor? Where is my home? We all love subsidiarity in this room. Is there anyone in this room against subsidiarity? No, we all have a subsidiarity tattoo, right? Okay, here's the thing. The whole concept of subsidiarity is that, like, the individual, or we want to take it down to a scale that makes the most sense. Who are you to tell me what makes the most sense and what my scale is? I have a brother who works for Facebook in California. I have a brother in Virginia who works for Oracle or IBM, whatever year it is. He keeps switching companies. I have family. I have 99 first cousins who I know and love. My sphere of my local is not Steubenville, and I love Steubenville. But there is a lot of this characterizing of people as there's just like all these bald assertions. These people are bad, these people are evil, these people don't care about you. You have no idea. I mean, you can read about Jeff Bezos or I always say Steve Jobs or Jobs, I forget his name. They're not all good people, of course they're not, but there's a lot of speculation on motives here that's totally inappropriate. And the next thing, what else did I want to say?
30 seconds.
A great point. Can't remember what it was. But scalping, football, tickets. What an awesome thing. I hate professional sports. I hate football. I think it's all so stupid. But the fact that someone can play football and make money, the fact that there's this whole group of people making money around football, someone selling tickets, and then someone else who maybe lives near the stadium and has some free time can actually scalp the tickets, make a little more money. You don't know what he's doing. Maybe he's buying coats for poor people. I love this secondary. That's awesome. That's humans being awesome. That's taking a thing and growing wealth everywhere. Okay? Now all of a sudden, it's not just football tickets. It's also this guy making a little more money because someone else has a little more money to buy those tickets. I don't. But the idea of like these layers of participation are great. This is humans doing awesome, resourceful things. That's not bad. It's what they do with the wealth that's good or bad. But wealth, growing wealth, layers of participation, beautiful. That's God, creative like God is creative. It's beautiful. Do I have any more time?
You're good. No
Okay.
time. Yeah, we're good. All right, thank you very much. All right, any other? Mr. Peter Sammons.
Here.
Bitcoin. Okay, so it's really easy, especially with the worst companies being the most vocal, to just immediately say, you know what, stock market, not for me, just gonna do something else. But especially when you log on Twitter and every time you see a new company saying, oh, we have a gay CEO, like okay, just forget it, invest in Bitcoin. But I know, opposite. But that's the easy way out, that's the lazy way out. Do your own research. So basically, invest in a good company. Not every company is evil. Coinbase, for example, not evil. They do not support Planned Parenthood or child labor or gay CEOs, I hope. So invest in a good company. And you may be thinking, oh, well, the risk is too great. Like, what if I don't do enough research? What if I invest in a bad company? And then my money goes to child labor. Then that would be terrible. But I'll tell you why you should do your research. You should invest in a good company. Because it is your moral responsibility as a Catholic to invest in a good company, to show the evil companies that what they are doing is evil. So, when you invest in a good company, you are saying, you have my money. You have my money. And you are telling the evil companies, you don't get my money, and in fact, someone else does. Just not investing, that will just funnel all of the money straight into the evil companies, because they're the biggest companies, and then everyone has a gay CEO. And
30 seconds.
So, invest in a good company. Don't invest in an evil company. Invest in a normal CEO.
All right, next up. Next up.
I would like to make a couple of points more. For one part, the bad things that companies that are in the stock market make is really bad. And I think the problem is size. They are big. But do you know small shops that do wrong things? I know a lot. From small shops that sell all sorts of things that are bad. Actually, most of the businesses that are really dirty are operating on a small scale. A lot of them. So it's not a matter only of being on the stock market. Then the lack of relationship of the owner with the management or the owner with the operation. You say, oh, I have a few shares of a big company in the stock market, I cannot go and visit the plant. It's true. You cannot tell the manager what to do. It's true. But it's not because the stock exchange is bad. It's because you are small. They don't pay attention to you because you are nobody. But go to a company that doesn't have participation in the stock market. Go to Coke companies, go to Cargill, go to any Mars, go to any of the big companies that don't trade in the stock market. You have no cannot say either. You cannot tell Cargill what to do. You are nobody.
30 seconds.
You are nobody anyway. The problem is that you are small. Now you have $50,000. Go in Steubenville and invest. Who's gonna take your $50,000? Show up in Leonardo and say, I have $50,000 for you. What will they say to you? How much will they pay? And if they take your money and give you a piece of paper, you are taking a lot of risk because they may not be there when you show up with your paper again. The problem is that you are small. It's the life of the poor.
Please conclude. Alright, next lightning round speech. Yes. Yep.
Just some quick clarifying points. There's a argument that having it's a simply quantitative difference. That is to say, you simply have less ownership when you own stock, but you could have more. As if there's no other way of sharing money in the project and reaping rewards. What I mean is this: it's not of any necessity that we use stocks as the way of supporting companies or making companies possible. Again, it's been mentioned, but it keeps on being glossed over. The only time your stock investments are giving cash to a company to operate is in the initial public offering. Everything after that is the secondary market. And at that point, everything is based on pure perception. So what you're producing is a market value, which is produced by perception. So it's simply not true to say, if I right now buy a bunch of stocks in Apple or whatever, that I'm giving them cash to operate with. That's not what's happening. I'm giving them an indefinite value increase that they can use for indefinite ends. So it's just a different thing. And furthermore, it seems to be kind of just misleading to say that, all that's lacking in the ownership, in stock ownership is when you have a tiny
30
say.
seconds.
No, it's not that you have a tiny say. You have just enough responsibility for improving the market value to be responsible for the company and so guilty whenever it uses that value to sin, but you don't have enough responsibility to stop it from sinning. To me, that seems like a complete trap that no Catholic should want to be in.
Thank you very much, Dr. Barr. All right, may I have speech? Mr. Nathan Burton.
If I don't make a very good argument, forgive me, I'm a STEM major. The first point I want to address is Dr. Welper's point about investing so we can have money in case something bad occurs. Now, this seems reasonable up front, but if we take a step back, we realize that what this is saying is we're supposed to live anticipating bad things will come to us. Now, this is the definition of paranoia, to live as if bad things will occur to us. Moreover, this removes the idea of relying on other people. We say, I'm going to be self-sufficient, and that doesn't include allowing my neighbor to love me. Another point I want to make is the idea that the average Franciscan student cares about ownership. In investing, they don't care about owning, they just want to make more money. I think we're dishonest to say I really care about owning this company, it's just I want to make more money. Aquinas talks about things that bear a false resemblance to prudence, and one of them is solicitude about material security. Solicitude is an earnest endeavor to attain something, and solicitude over material security is an earnest endeavor to attain material security. One way that's wrong is making money for its own sake, money as an end in itself. In investing in the stock market, the whole idea is I'm going to make money so I can make money so I can make money. And the stock market systematizes that and makes it profitable. The last point I want to make is this idea that even well-meaning
Please conclude.
Well-meaning investors, I'm going to invest money so I can do good later. This sounds to me a lot like the idea of, Christ, I'll follow you once I bury my father. Christ, I'll follow you once I say goodbye to my family. We're supposed to use our money now so we can build the kingdom of heaven. Thank you.
We'll have 2 more lightning round speeches. Mr. Larkins.
In a quick scene for you. It's 2008, I'm 9 years old, I'm sitting in the back of our 1999 Chevy Venture going to an exam. My dad comes home at the same time. This has never happened to me in my life before. My mom rolls down the window, talks to him, and then tells us as we're driving away that Dad's home for the day. Why? Well, the stock market did something bad. And my only thought was, the stock market's really cool. The stock market gave me my dad back that day. And that was the end of my stock market education. So, despite the academic garb that I wear, I'm going to include myself with David Willey among those who really don't know a whole lot about the inner mechanisms that are at stake in operating when the stock market is at play. But here's something I was really good at, which was imaginative exercises. Again, I spent a lot of time at the back of this 1990 Chevy Venture. So here's a thought experiment, and I'd like to pose this as sort of a Catholic creative challenge to those who are sitting there who might be lost either in the mire of the arguments on the technicality or who are looking for something positive to ground themselves in. Ignatian spirituality has this idea that one of the ways you can discern whether something is the will of God or not is to imagine yourself standing before the throne of Christ on Judgment Day and giving an examination of the things you've done in your life. I find it a little bit difficult if I were standing before the throne of Christ and he asked me, all right, here's the talents I gave you. Here's the life that I gave you. What did you return for me? Well, let me tell you, Fortune 500 companies did better because I invested. Well, maybe. That's something. But I'm going to feel really bad if I get out of line and St. Francis gets up and tells what he did with the time and talent that he was given from God. Well, the difficulty I have with this is really a lack of imagination. There's all kinds of technical arguments which I think have been given better in favor or contrary to the stock market, but the one I'd like to give you is this. Is your moral imagination really so low that the best thing you can think to do with your money in your particular circumstances right now is send it to Silicon Valley? I find that difficult to believe, and if so, you seem to have a lot to answer for so far as you've treated the neighbors immediately present to you, and this is not a conciliatory argument for localism so much as it is present to you immediately are those whom Christ has given you particular circumstances that you ought to love and care for. You don't need to search for them. They're everywhere around you. And so the notion that in order for you to do well, you need to outsource the means of your own ability to be charitable to others far away and hope that the benefit will accrue to you later seems to me to be a real lack of imagination.
Thank you. Final lightning round speech. Ms. Worski.
Well, if your imagination is so low, you could bury the coin so when our Lord came back, he could get the investment off of it. The other thing is, so if we imagine that no Catholics invest in the stock market isn't going to disappear. There are still going to be people that go invest in it. It just won't be Catholics. So it will be entirely capitalistic, and then everything will be going towards, like, say, pornography to make the most money. So I think we do have a duty to invest in it in a way that's going to support things that have actual virtue in them. So there are businesses. So man is not entirely, if business is not entirely evil, if that was so, then we should not invest in it. But because man is a dichotomy of good and evil, there is good that needs to be supported. So in this, so we should not just entirely not invest within the stock market.
Thank you very much. We now move into the concluding speeches. First off, our affirmative, 3 minutes.
Thank you all for a wonderful debate. Too much to summarize, many great things. I'm reminded of a story in the Gilded Age, late 1800s, of Rockefeller. He was a lot more anti-Catholic than some of our modern Silicon Valley friends. So New St. Patrick's was being built right across from Rockefeller Plaza. He wasn't very happy about that. And so if you go to Rockefeller Plaza, he built this enormous statue of Atlas holding the world on his back. And in reply, the Cardinal Archbishop put a small statue of the Infant of Prague up on the facade of New St. Patrick's. We know how this story ends. The story ends with the victory of Christ in his kingdom. I think what Mr. Larkins brought up, the aesthetic of it, that the life well lived and the capital that we've been given, why look for something lower? Why not look to the subsidiarity model, to the creativity that real ownership actually demands of us? And this is why I would urge you to affirm the motion. Catholics shouldn't, just because it's just better to be Catholic and use your capital in the best way. Use your ownership in the best way. Like I said before, it's not morally reprehensible. I don't want to come out here as a condemnatory. I want it to be an encouragement. An encouragement for us to look at what we're doing with our lives, look at what we're doing with our treasure, and say, where is the best place to put this? If Isengard IPO'd, I think the Vatican Bank would buy the first shares. Right? And I don't find that, are we building up Isengards? Are we building up Hobbitons? The Isengards, I guarantee Isengard's going to give you superior returns. That's fine. That's fine. Maybe go to the Green Dragon, have yourself a pint, and be glad you're Catholic.
Thank you. And next, concluding speech from the opposing side.
I want to mention, since you're going to vote on this, right? That's what's going on. There was a rhetorical question very early in the evening. Would Catholics have invented this, industry, this way that markets operate, stock markets, banking institutions, financial instruments? Yes. Genoese, people from Venice, Rome, Florence, in the Middle Ages, Catholics invented banking, finance, stock markets. That's the answer. Are they things that are inherently evil? No. I think we've settled that. It's really a human invention to deal with certain kinds of problems that we have. One of those problems being, if you see an incredibly complicated problem on planet Earth, it might take immense amounts of financial resources to install a, let's say, sufficient capital in forms of physical capital, sufficient amounts of education and training and skills, so human capital. Right? These are like what we'll call proximate factors to economic growth. Right? What is economic growth for? Well, let's see. This year we expect the world to produce about $100 trillion of goods and services. Goods and services that maybe are medical interventions so that a person with cancer is being relieved of their illness. Or perhaps it's an invention, that's just like the most surprising thing that we would never have thought of unless there was this massive collaborative effort and idea generation occurring. So that who knows, it's going to be unpredictable, but in the next few decades, we're going to be very surprised by inventions and creative products and services that transform human life and help us flourish. Will there be wicked people involved? Yes, there's just no way that's not going to end. So in the drama of life, prioritize preaching the gospel, living as Francis did, sure. I have friends though, I'll tell you, I have a friend who works in Silicon Valley, makes $5 million a year, TAC grad. I called him and said, why did Amazon Web Services hire you? And they're public about their hiring and the wages they earn, and here's a Catholic man with 10 kids who says this is a great burden.
30 seconds.
Pray for me. We have to pray for people who have wealth also and love them. Draw them to Jesus Christ. Don't destroy their idols. St. Augustine says, convert their hearts. They will destroy their idols after converting.
Thank you very much. Now we move into the final vote. All those who, so the motion is, this House believes that Catholics should not invest in the stock market. First, we will have those who want to affirm the motion stand and raise your hand. those who oppose the motion, please stand.
I just want to let you know that expires the
Please sit down. And if you decide you're not invested in this at all and would like to abstain, please stand and raise your hand. All right, so with 60 opposing and 37 affirming, the motion has failed.